breaking financial news overnight about another bank failure. Regulators have seized First Republic Bank.
A new report says that as many as 186 banks in the U.S. could be in trouble.
Americans can have confidence that the banking system is safe.
They keep saying, don't worry, everything's fine, but everything's not fine. Another bank has just collapsed. This time it was First Republic Bank. That is now the second biggest banking collapse in US history. Trust in the banking system is currently failing. So let's talk about the latest banking collapse and the reason why we could be seeing a lot more chaos in the US banking sector in the months to come. Because with 186 more banks estimated to be at risk, there could be a lot more shit to hit the fan in the US banking sector. First Republic, let's start there. They've been seized and they've been then sold to JP Morgan because of course it got sold to JP Morgan. In the last 2 months, 3 of the 4 biggest bank collapses in US history have happened. Plus, Credit Suisse, an international bank, also collapsed and got bailed out and bought out and all that stuff, but it's insanity. The US bank collapses are already bigger than the 2008 banking crisis collapses. These 3 banks combined had more assets than all the 2008 collapses combined. That's crazy, man. Now you see, it was bought out by JP Morgan, a too big to fail bank, which received guarantees from the FDIC for $50 billion in financing if they came in and took the deal. So this was basically the government's way of getting to say, we're not bailing out the banks. It's just a private, well-to-do corporate citizen named JP Morgan coming in to look out for the little guy. And their bottom line, of course, I'm sure the $50 billion in incentives helps to some degree, but let's be clear, this is nothing more than a backdoor bailout. They're letting JP Morgan do the bailout and giving them money in the back end. Plus, the government couldn't let $173 billion in residential and commercial property loans fall to pieces. It would cause too much chaos in the system. If you have money in a small regional US bank right now, I hate to say it, but you might want to consider moving your money over to one of the too big to fail banks like JP Morgan. I know, guys, I know. It is what it is. That's what's happening right now. It's no wonder Bitcoin has risen so much in popularity this year. If the choice is between watching your bank collapse or putting your money with someone like JP fricking Morgan or one of the other too big to fail banks, then yikes. Doesn't sound like a great choice, does it? Give me Bitcoin, please. Anyway, First Republic Bank is just the latest bank to collapse. JP Morgan chief investment officer has come out and said that it would be naive to think that First Republic is the last victim. Although, to contradict that, JP Morgan CEO, no, not that guy, this guy, Jamie Dimon, and I know what you're thinking right now, but come on, guys. Anyway, he said that this part of the crisis is over, that the resolution of First Republic Bank has largely ended the banking crisis, and that there are only so many banks offsides in this particular way. But there are more banks on the brink right now, despite what Jamie Dimon is saying. Cross River Bank, for example, has just received a letter from the FDIC claiming that it has engaged in unsafe and unsound lending practices. This one in particular is important because it's one of the last big crypto banks standing. It is the bank for both Coinbase and USDC parent company, Circle. Come on, man. I guess JP Morgan's about to get 2 more customers. Coinbase, Circle, get over there, guys. But Cross River is not alone. Nope, PacWest and loads of others are teetering on the edge of oblivion. Now, before we discuss the major risks still being faced by banks and why more collapses could still be coming, I wanted to let you know about my weekly newsletter. It's called Wealth Mastery. Now look, every single week, my team and I spend about 40 hours researching, hunting down alpha on crypto, altcoins, DeFi, NFTs, airdrops, and much, much more. We condense all of that into an easy 10-minute to read email that comes to your inbox. Join our 65,000 weekly readers and sign up for free using the link down below in the description. Now let's talk about why more banks might go under. See, right now, we're seeing nothing less than a fundamental reordering of the US banking system. The USA is essentially kind of like nationalizing the banking sector. And why do I say that? Well, it's pretty simple, because the two big to fail banks like JP Morgan have basically got a government guarantee for their entire deposit base. The government's not going to let those banks fail. They're backstopping them, meaning that the Federal Reserve will step in to print to make sure those banks don't go under. And as always, losses will be socialized, gains will be privatized. That's how the game works, guys. But there is a big task ahead, because three major factors could still see dozens more banks get into big trouble, and things could still get worse before they get better. The first of these, of course, are just simple bank runs. Look, these banks, the reason a lot of them have failed is that people got scared, rightfully so, obviously, and started rushing for the exits. All the US banks that have failed had the same damn problem: massive money outflows. First Republic, for example, saw $100 billion leave the bank in just the last 30 days. That's a big problem for any bank, particularly a bank that only had $300 billion in the first place, so a third of the money fled out the door. And as more rumors flood the internet of the next potential bank to collapse, I would not be surprised to see this trend continuing. But look, why can't banks just handle people trying to take their money out of the bank? That should be a given when you put money in the bank, right? Well, it's one simple reason. They don't have all your money, man. All of the insanity of no-limit fractional reserve lending, I'm just gonna put that aside for the moment, because the real problem right now has become that the assets that the banks hold, which is the second reason that I want to discuss here with you of why banks could be in even more big trouble moving forward. Basically, banks have had so much money flow in that they have not been able to lend all that money out. Not enough house and business loan requests, basically. But the banks still had to do something with that money. So they took your money and they put it into US Treasury bonds, US mortgage-backed securities. The problem here is that those assets have long-term maturity dates, like 10-year bonds, right? That's very problematic to be holding right now if you need cash at this minute, right? Because of current market conditions, those 186 banks at risk of collapse are sitting on $620 billion estimated in unrealized losses from holding these kind of products. That's of course due to the markets for these assets coming under a lot of pressure in the last year. So if customers want their money, then the banks are forced to sell the assets for massive losses to try and cover the withdrawal requests, and then the banks collapse. But the real problem, the really thing we have to watch out for is probably the third reason here, which is commercial real estate. As Berkshire Hathaway's Charlie Munger has warned, the US commercial property market is likely headed for big trouble. He said that American banks are full of bad loans on commercial property, and that a lot of real estate isn't so good anymore, and we have a lot of troubled office buildings, a lot of troubled shopping centers. There's a lot of agony out there. And he's right. Look, just think about it for a second. After COVID, everybody wants to work at home. I mean, why wouldn't they, right? Which means the office blocks are sitting like half empty. You can't have that happening if you're a business. The cafes that serviced all those office blocks, they're closing down. There's no one there to buy coffee and sandwiches anymore. And fewer people go shopping in person these days. And that was even increased massively under the times of COVID. Everyone shopped online even more than they did before. And the big banks, they're finding that they're deeply exposed to the commercial real estate market right now. This could be the next big pain point in US markets, and is definitely something to be keeping an eye on that could really throw a lot of chaos into the banking sector in the USA for the rest of the year. Okay, that's it. Subscribe now. I'll see you next time.